Hello, everyone. My name is Marcello Kolax, and as always, we do have our weekly technical analysis outlook, this time for the week starting the 4th of September 2023. But before we do so, I have a little bit of good news for everyone because for the very first time ever, I'll introduce myself as the managing director of Clever Markets. Clever Markets, I'm very proud of that, is a technical analysis boutique that focuses on European energy markets. So essentially, you can see us as your outsourced in-house technical analysis department. And to start it off, I'm hosting the launch event on the 19th of September, and I will explain to you how I have been working with the markets over the past couple of years. And we'll focus on only one bit during that free webinar on the 19th of September, and that is trend spotting. So this is my guide on how I have done it over the past couple of years. And it starts very basic and gets a little bit more complex later on. So whether you are advanced or a little bit more on the beginner stage, it is definitely good for you as either a refresher or to dive deep into the markets, get your first little tool that you can actually use in terms of identifying like market structure. So the link is in the description. Do sign up and yeah, hopefully see you all there. Okay, let's have a look at the markets. We are looking at the TTF front month, and it is the weekly chart that we have in front of us here. And we do see that we've had this long downtrend since August 2022. And we have now just recently, a couple of weeks ago, we did break above the descending trend channel, but we haven't made a higher high yet. So what does that mean? Well, first of all, it means that the downtrend probably is paused for now. But we do not have a bull market running yet because we haven't made a new high yet. So, however, where you define the high doesn't really matter. If you put it here, yeah, or rather here, or even you take the candle body, we have not yet closed above it. So we are not bearish anymore, and we are definitely not quite bullish yet. So that's why for now we remain neutral. For the midterm outlook, we are switching it from bearishness. Some people might be also looking at this here because we do have our first higher trough, but do we have a first higher high yet? No. So that's why we have to wait a little bit. Okay, so what are the secondary tools saying? So we do have the stochastic here that is topping out for a second time, which is more or less simply a reflection of these two price peaks here. We do see the MACD pulling higher, so maybe eventually we get a bullish signal here, but for now, midterm neutrality. Let's have a look at the daily chart. Okay, so let's start with the good old things that are already familiar to us. So you do know that we did have this triangle forming since early June, and we did break higher, which generated a triangle target around here. So a triangle target is this length, then applied to the breakout direction, which brings us to like the 55, 56 area. This level also coincides with the 200-day exponential moving average, so this might be pulling the market higher a little bit. We do see this here was the announcement of potential strikes in Australia for the LNG market, so this pushed the market higher. Why? Because this downtrend here was informed by a number of fundamental factors. The first one was Europe being, or having shown the willingness to destroy demand with their policies to make it through the winter. The next is high storage fullness levels at the moment. Also, security of supply through LNG. So all this has informed the descending downtrend. But when strikes in Australia were first discussed, that actually pushed the price above the channel. And can you see how fundamental and technical analysis closely play together here? So with the outage, sorry, with the threatened strikes, yes, we knew that the market has to move higher, but how high and for how long, right? And when has the market fully digested the news? So all of this is reflected in price, and we use technical analysis to identify exactly that. So, you might have also seen that we do have a little bit of an Elliott wave happening. So what an Elliott wave is, it's just a bit of like market structure. We can count out the price swings a little bit in order to anticipate the next big move. And we can start here. So for example, this was a big one, one, two, wait, one, two, three. Um, then some have four here and then five there. So this all makes sense. And now we are going for ABC, which is a big retracement. So it would go like this, A, B, and then usually the C would end us here. So this is an Elliott wave structure. I'm not a big fan of it because I feel that the times that it does help, it's often maybe a little bit late. So usually you can capture it from the maybe one, two, three. Yeah, three is usually the strongest leg, which is the case here as well. But it's a little bit based on hindsight, and if you know a little bit about how it came about, um, not so reliable. But when it is this obvious, I assume that other traders are looking at it. So why shouldn't I see what other traders are seeing? Why would I refuse to see what other traders are seeing, right? So in this case, we're using it for that exactly that purpose. And by definition, we would see this Elliott wave C possibly push below the trough here. So in summary, we do see that we do have like pull coming from the target and the 200-day exponential moving average, so that would push the price potentially higher. On the bearish side, however, we do have the Elliott wave C, which would push us a little bit lower. So which one is it? Well, we do see that on the MACD, we have clearly peaked out and now we are gradually moving lower. So there's an indication of the market moving lower as well. We also see that the stochastic started to push lower again. So whereas here we could see, so the market is actually aligned with the stochastic, but now we can see that it is pushing lower a little bit, and so is the market. So probably a little bit of bearishness is more or seems more likely right now with the information available to us. So that's why I updated my view in terms of being near-term bearish because we did have our first lower peaks and we did start forming lower troughs and we're in an Elliott wave C, so that's why I expect the market to move to somewhere around here. The alternative case is still the push towards the 200-day EMA or the triangle target, but as of now it seems less likely. When here TA is good for knowing when you would revise your view, so I would revise my bearish stance, near-term stance, above 39.38, then I would start thinking, okay, maybe we are not going to push down here immediately. Can you see how TA actually helps with that sort of thing? We don't know where the market is going. I'm not pretending that I do. Nobody does, by the way. And everyone who says they do, they're probably lying to you. We're just trying to be prepared for any possible movement. And that's what TA does. Okay, so this is the TTF for us. So midterm, from bearishness to neutrality. Near term, probably a little bit of losses. Okay, let's have a look at Brent. So, as always, we do start on the weekly chart. And we do see that the market has come down, and then for all of this year, we have been moving in a sideways trend. Earlier this year, we did shift lower a little bit, and just recently, we pushed higher. In the longer term, maybe even the midterm, I would still be a little bit neutral because this range has not yet been resolved. And so for the longer term, I'm a little bit neutral. For the medium term, maybe you could say, yeah, what is this? 1, 2, 3, 4, 5, 6 weeks of gains. But for the medium to long term, not all that relevant because for this, we would want to look into the daily chart because the daily outlook is definitely bullish. Why is that? Here zooming out again, so we do see this here is the range that I was talking about, yeah. Then we shifted a little bit lower in May, and now we've broken higher. And we can see that each old resistance level turned into support. That's good, that's bullish. The old resistance level turned into support. Good. So now maybe this resistance level here is turning into support as well once it is resolved. So, um, wait, nothing is moving. Ah, there you go. So for now, I last week, at the end of last week, I suggested that it might be possible that the market is actually moving a little bit longer in this sideways range. That's what I said last week, before we eventually break higher. That was my idea. But now we can see that with the candle, with the green candle, the week ending above the preceding peak, and you can see we haven't really pushed to the peak since January 2020, 24th of January. So this is very exciting. We also do get a bullish signal on the MACD. Yeah, the MACD line crossed above its trigger line. We are still well above zero. And the only thing that's a little bit worrying, but not really, is this hinging on the oscillator. What does hinging mean? Hinging means we don't get a immediate drop. It's just like a little bit sideways. Yeah. So this is not a trading signal. It's just a little bit of a warning. So how can we use this to our advantage? So we do see the market pushing higher after like two really strong days of gains. I think it would be perfectly acceptable for the market to retrace a little bit before pushing higher and resolving this range and actually contributing to a potential midterm bull market. But how low can it retrace? Well, for that, I'm looking at Fibonacci retracement levels. I'm just putting them on this last little up leg here. And a retracement towards like under like 23, it's considered noise. Yeah, so if we do something like this here, we just still consider noise. To the 38.2%, this would be considered a normal minor correction, but even all the way until 61.8, that would still be perfectly acceptable. And I wouldn't really undo my near-term bullish stance, even if the sideways, the very near-term sideways range is a little bit extended. That's fine. So let's have a look at past fib retracement. So let's have a look at this bit here, right? So once again, we do take the peak and the trough, and we can see that the market, oh, this is getting messy, retraced exactly to the 61.8%, yeah, and before moving higher again. And let's have a look, I don't know, at this here, for example. So we are drawing this, the fibs like so, and we can see, we made it past 23.6, around the 38.2. Yeah, boom, moved into it before continuing higher. So do not be worried about a little bit of a retracement. Essentially, this is a good opportunity for anyone who's still on the sidelines to maybe move into the market, or if you're interested or you're already long and you're pyramiding your positions, then this is a good opportunity to like put on a little bit of a heavier position with the expectation of the market breaking higher. When am I wrong? Okay, so this here, TA is always good to tell you when you're wrong. If we are truly not managing to break above this peak in the midterm. So if we do something like this, yeah, you would really need the patience and consistency, and you would have to align it with your fundamental view as well. But then we might struggle a little bit more here. So if that happens, then the eventual push higher might be delayed. But I am bullish until we actually break below this trough at what is it, like 80. So there's like many trough levels as I explained last time. Yeah, so it could be here, 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 here. So there's a lot of support coming in. So but anywhere in the 82, 81, if we break below this, then I would undo my bullish near-term view. But for now, that seems unlikely, and a break higher seems more likely. So in order to mark this for our next week, I am putting on, whoop, not this. I am saying that for now, the idea is maybe a little bit of retracement before pushing higher. And we'll leave that on until next week for extra transparency to see where we end up. Okay, I'm just putting it like so. All right. So in summary, On the weekly chart, we are still neutral because we still haven't made a higher high yet. But on the daily chart, we are very much bullish with the potential to retrace a little bit lower before attempting to break above this midterm bullish, sorry, breaking above this midterm range. Okay, let's have a look at carbon. Here we also start on the weekly chart. We do have this long uptrend channel since 2017. More recently, I mean, this has been since February. We have in the midterm, we do have this ascending triangle. And within this ascending triangle, we have this descending channel, which is relevant for the daily chart. So midterm, neutral. We can see um, that we are near zero at the MACD. Nothing is really happening here, not too exciting. Also, you can see the oscillators are just pushing sideways, so midterm sideways perfectly acceptable. And it also aligns with simply this triangle where price moves in an increasingly tighter range. But what's happening on the daily chart? Okay, so what we see here is really, really nice swings. So in the near term, the markets tend to mean reverse, which means they're just swinging. In the midterm, the markets tend to trend. So maybe looking at a trend following method for the midterm is usually advised, and for something a little bit more like mean reversey for the near term. And you can see the market carbon has been given us like really precise, really nice signals. So you did get a bearish signal here and a bullish signal here and a bearish signal here and a bullish signal here, bearish signal here. So this is not too bad, yeah. So we can definitely be working with that. In this case, I also wouldn't want to look at the 200-day EMA as a trigger because there's no value to be derived. If you would go bearish here and then close out here again, you're at zero more or less, yeah. So you don't really, or you go bullish here and then go bearish here again, bullish here. So you just come out at zero. That's why we don't want to look at the 200-day EMA. You'd rather look at oscillators. Yeah. Also, we don't really want to look at the MACD all that much because that would just throw you in and out of positions all the time. I would also in these like more, I mean, the market is descending, but at what rate, right? So it does look a little bit sideways to me. In such markets, you also don't want to use Ichimoku clouds or there's simply any tools that are based on moving averages or an idea of a moving average because I apologize apologies for this messy trend, but Ichimoku clouds wouldn't have helped us here at all whoop, since when? Yeah, since forever, since this down channel started hitting off. So I wouldn't know why anyone would be looking at these right now. In contrast, I'm switching back to Brent. For the longest time, Ichimoku clouds also have not been very useful. Can you see? Would you want to trade any of these Ichimoku cloud signals here? Yeah. So just if you're not familiar with it, there's a lot of squiggly lines, can get very confusing. But just think that above the cloud we are bullish and below the cloud we are bearish. There's a lot of other things you can do with it. Yeah, look at the lagging line for confirmation and all that. So for the for Brent, this makes sense to start looking at Ichimoku clouds now because it does give us a little bit of a bullish outlook. So the candle is plotted in advance. So here's the latest price. The cloud goes ahead. It's green, it's thickening, looks good. So that's why I'm also fairly bullish. But on carbon, why would I use this? Just false signals. Okay, removing this. Last week, I said, or my thoughts were still with the market fairly quickly pushing to 82. But this hasn't happened yet. We spent the entire week a little bit in a sideways range. And this is important to read early. So on the first day, for those who are following me on LinkedIn, you would have known that, of course, this is a little bit of hesitation after 2 strong days. That's very possible. And a little bit of a retracement higher before pushing lower would be reasonable. But then we did get another small-bodied long-wicked candle, and another, and another, and another, and another. So here this shows that there's absolute indecision in the market or equilibrium. Maybe everyone is happy with how how the way things are now, right? Price wise and supply wise. So here I would encourage you, if you're still trading, do it on a like a 15-minute chart in order to take advantage of these violent swings intraday. But for the daily chart, there's nothing to trade here right now. I would be closely watching this support area and this resistance area, because they will give us very early signals as to whether or not we'll resolve higher or lower. And once we resolve, we do have very clear signals. So the first, if we break above 87.3, we could easily make it to 90, because that is this peak, and it also coincides with this channel boundary. However, if we break below 84.5, we could easily make it to 82.3, because there's nothing else in the way. And it's also this triangle's lower boundary. So what do I think is going to happen? Well, we can't use momentum tools because there isn't much. But what we can do is we can see that the stochastic still has like a couple of good days left before moving into oversold territory, which in itself isn't a bearish signal. Moving out of it is a signal, not moving into it. Yeah. But overall, the idea is still the same. We are still in a descending channel. We are still, well, somewhat swinging lower. We have lower peaks. Uh, Lower troughs are still pending at this one too. Hopefully a third one here. So overall, my heart is still with the bears. Okay, but here's the thing. Always a caveat. I know when I'm wrong, and that's what TA is for. Okay, cool. That is it. These are the three markets. Thank you very much. Once again, it would be great if I could see you there. Over the past years, I have trained hundreds of traders and analysts and portfolio managers. And I had a lot of like one-on-one conversations, and I'm even a guest lecturer here at Singaporean universities to introduce the next generation of traders to technical analysis. But now, for the first time, I can reach an even wider audience with clever markets. So if you want that your network gets something out of this as well, then please consider sharing the link in the descriptions. I'm very happy about how things are working out right now. So if you are with me on that journey, if we walk this together, would be great. Uh, See you around. Thank you very much and have a good week ahead. Bye bye.